Hey everyone, ready for another deep dive?
Always. What are we exploring today?
Well, today we're tackling financial advice, but specifically for those who are new to investing.
Perfect timing. So many people are looking for guidance.
Exactly. And we've got some awesome sources to help us out.
Like what?
We've got 7 great investing books for beginners
Oh, nice. A classic.
and some practical guides too on how to actually start investing from Fidelity and Vanguard.
Oh, those are great resources. Super practical.
And to round it out, we have a really helpful introduction to investing guide that breaks down different types of assets.
Sounds like we've got all the bases covered.
I think so. And we'll even be touching on some wisdom from big names like, Warren Buffett.
Oh, can't go wrong with some Buffett wisdom.
Right. Did you know he actually credits a lot of his success to value investing? It's all laid out in Benjamin Graham's book, The Intelligent Investor.
Oh, yeah. That's a must read for any investor.
Seriously. And that's just one of the nuggets we'll be digging into today.
I'm excited to see what else we uncover.
Me too. Speaking of uncovering things, I was really struck by how much emphasis the ultimate guide to financial literacy for adults puts on the basics.
Makes sense, though, right? You've got to have a solid foundation.
Absolutely. But it goes beyond just budgeting.
Oh, for sure.
This guide is all about helping you figure out your goals and then making your money work towards them.
I like that approach. It's not just about restriction, it's about empowerment.
Totally.
Okay.
What really stood out to you from this guide?
I loved how it emphasized having a clear purpose for your money. Like, what do you actually want to achieve with it?
Yeah, that's powerful.
It is. And they had that 50, 20, 30 rule. Have you heard of that one?
Oh, yeah. 50% for needs, 20% for savings and investments, and then 30% for wants.
Exactly. It's such a simple framework, but it's really effective for allocating your money in a way that aligns with your goals.
Right. It's like a starting point for figuring out where your money is going.
Exactly.
I used to think budgeting was all about deprivation, but that 30% for wants really changed my perspective.
Oh, it's crucial. You have to enjoy life too, right?
Exactly. It's
Yeah.
all about balance.
For sure.
Something else that got me thinking from that ultimate guide was their section on bank accounts.
Oh, yeah. What about it?
Well, it's easy to just think checking and savings, right?
Right.
But they really highlighted high-yield savings accounts.
Oh, yeah. Those can be great, especially for a newer investor.
You think so?
Yeah, definitely. With a checking account, that's for your day-to-day expenses, obviously.
Right. Gotta have that.
But a high-yield savings account lets your money earn a bit more interest.
Oh, that's smart.
Plus, it's still easy to access if you need it,
Makes sense.
which makes it perfect for building that emergency fund,
Oh, good point. That's something all our sources emphasize too.
didn't they?
Yeah. Like having 3 to 6 months of living expenses saved up just in case.
It's like a financial safety net.
Totally. It really takes the pressure off.
For sure.
Speaking of long-term thinking, both Fidelity and Vanguard's guides on how to start investing really emphasize growing your wealth over time.
Yeah, it's not about getting rich quick. It's a long game.
So true. For someone totally new to investing, what's the most important thing to keep in mind?
Good question. I'd say understanding that investing is really a long-term strategy.
Okay, so patience is key.
Definitely. It's not about quick wins, it's about slowly building wealth over time.
Gotcha.
And this is where asset classes come in.
Oh, right. Stocks, bonds, real estate, all that.
Exactly. They each have different levels of risk and different potential for growth.
Makes sense.
Yeah.
And our Introduction to Investing guide breaks all those asset classes down in a really clear way.
It does.
I loved how simply it explained stocks and bonds.
Oh, yeah.
Like owning stock is like owning a tiny little piece of a company,
Right.
and bonds are basically like lending money.
Exactly. Simple as that.
Yeah, it just clicked for me when I read it.
Sometimes you just need things explained in that simple way.
Totally. What about you? What stood out to you from that guide?
Honestly, the thing that really resonated with me was the importance of diversification.
Tell me more about that.
It's that classic advice, don't put all your eggs in one basket.
Right. Don't risk it all on one thing.
Exactly. But it applies to your investments too. By spreading your investments across different asset classes, you're essentially creating a buffer against risk.
So if one investment doesn't do so well, others can help balance things out.
Exactly. You're not putting all your hopes on one single thing.
Makes a lot of sense.
It does.
So if someone's just starting out, how do they even know where to begin with diversifying?
That's a great question. Both Fidelity and Vanguard talk about the difference between active and passive investing.
Oh, right. I've heard those terms. but could you break them down for us?
Sure. Active investing is where you're trying to beat the market by picking individual stocks yourself.
Oh, so like doing a ton of research.
Exactly. It can require a lot of research and time to really do it well.
That sounds intense.
It can be. Then you have passive investing, which is more about investing in index funds or ETFs.
Right, I think I've heard of those.
These basically track a specific market index.
So it's less about picking winners and losers and more about following the general market trend.
Exactly. It's a more hands-off approach.
I bet that's less intimidating for a lot of new investors.
Probably. It's all about long-term growth instead of trying to perfectly time the market.
Speaking of long-term strategies, I was fascinated by John Bogle's book,
Oh, which one?
The Little Book of Common Sense Investing. It's actually one of the books featured in 7 great investing books for beginners.
Ah, a classic choice. What stood out to you about it?
His emphasis on low-cost index funds for steady growth, it just seems so simple and yet kind of revolutionary at the same time.
Well, Bogle, who founded Vanguard, he really believed in this approach.
He did.
Yeah. He felt that over the long term, most investors are better off just trying to match the market return.
Instead of trying to beat it.
Exactly. Like, don't try to be a hero. Just keep it simple and let time work its magic.
I love that.
It's really about patience and discipline.
Oh, and his buy and hold strategy really stuck with me too.
Oh, that's a good one.
Basically being patient and disciplined even when the market is going crazy.
It's harder than it sounds, though.
Oh, definitely. But it makes sense in theory.
For sure. But it can be tough to stick with it when things get volatile.
Makes you wonder, though, is there ever a time when that buy and hold strategy might not be the best approach?
That's a great question.
I just imagine there might be some exceptions, right?
Well, while generally buy and hold is a good strategy for those investing long term, there might be certain market situations or even individual circumstances where,
Or it might not be ideal.
right, maybe a more active approach is needed or some adjustments to your portfolio.
I see.
But for most people starting out, especially new investors, staying the course and focusing on the long game is usually the way to go.
Okay, that's good to hear. I think one of the biggest things that scares people about investing is the fear of losing money, especially when the market dips.
Oh, absolutely. Nobody likes to see their investments go down.
Right. But Fidelity's guide talks about something called dollar cost averaging.
Oh, yeah, dollar cost averaging. It can be a great way to deal with that fear.
How so?
Basically, you invest a set amount of money at regular intervals, no matter what the market is doing.
So, like, if the market is down, you're still buying in.
Exactly. And by doing that, you average out your purchase price over time.
So you're not as affected by those short-term drops.
Right. It helps reduce the impact of market volatility.
So it's like taking the emotion out of investing a bit.
Yeah, you could say that. You're not making decisions based on fear or excitement. You're sticking to your plan.
I like that.
It's a good strategy.
Now, let's say someone's ready to take that first step, but maybe they're not comfortable managing their own portfolio.
Happens all the time.
What are some good options for them?
Well, Fidelity actually recommends robo-advisors as a good option.
Oh, those are becoming more and more popular, right?
They are. Basically, they use algorithms to build and manage your portfolio based on your risk tolerance and your goals.
So it takes a lot of the guesswork out of it.
Exactly. It's a hands-off approach, which can be really helpful.
I can see that.
And for those thinking about retirement specifically,
Oh, right.
target date funds are another fantastic option.
I've heard those mentioned a few times. How do those work again?
So they're designed to automatically adjust your asset allocation as you get closer to your retirement date.
Oh, smart. So it becomes more conservative over time.
Exactly. So it really takes a lot of the thinking and active management out of it.
It's like having a retirement plan on autopilot.
Yeah, you could say that.
Now, our sources do a great job of explaining different types of investment accounts, too.
Yeah, like 401ks, IRAs, Roth IRAs.
Even 529 plans for education and brokerage accounts. There are so many to choose from.
It's a lot to take in.
It can feel overwhelming.
It can, but it's really about finding the right tool for the job.
Makes sense.
Like understanding the ins and outs of these accounts, especially the tax advantages that come with 401ks and IRAs,
Oh, that's important.
can make a huge difference in the long run.
Like getting a bonus just for being smart about your savings.
Exactly. It's worth taking the time to understand.
Right. And speaking of smart savings, those tax advantages can really boost those long-term returns, too.
They can. It's like a head start on your financial goals.
That's exciting. What I'm really getting from all this is that knowledge is power when it comes to investing.
Oh, absolutely. The more you understand, the more confident you'll be in making decisions that are right for you.
Totally.
Which brings us to some of the books recommended for new investors in 7 great investing books for beginners.
Oh, perfect. Let's dive into those.
That's good.
Let's start with The Boglehead's Guide to Investing, since we've already touched on John Bogle's approach.
Good idea. It's a great one.
What makes this guide stand out?
Well, it's full of practical advice from a whole community of investors who really follow Bogle's principles.
Oh, cool. Like a group of like-minded people.
Exactly. They actually call themselves Bogleheads, which I think is kind of fun.
I love that. It's
Yeah.
like having a support system for your investing journey.
Exactly. You don't have to figure it all out alone.
That's so reassuring. And for those who maybe feel a bit intimidated by dense financial books, there's also Morningstar's 30-Minute Money Solutions, a step-by-step guide to managing your finances.
Oh, that's a great one, too.
What's the draw of that one?
It's all about breaking down those complex financial topics into manageable steps.
So it's not overwhelming.
Exactly. Perfect for someone who wants clear and concise advice.
I can definitely see the appeal of that. Now, for our younger listeners who are just starting out, there's Ramit Sethi's I Will Teach You to Be Rich.
Oh, that's a popular one.
It is. What are some of the key takeaways from that book?
Well, Sethi really focuses on building a strong financial foundation from a young age.
So starting early.
Exactly. He covers everything from banking and saving to budgeting and investing, all laid out in a practical 6-week program.
It's never too early to start those good habits, right?
Never. Now, for those ready to really dive deep into the philosophy of investing, there's the classic The Intelligent Investor, the definitive book on value investing by Benjamin Graham,
The one Warren Buffett credits with shaping his approach.
the one and only.
What's so special about this book?
Well, Graham teaches you to evaluate a business based on its intrinsic worth, not just the short-term ups and downs of the market.
So looking beyond the hype.
Exactly. It's about finding those hidden gems that might be undervalued.
That sounds like a valuable skill to learn. What about A Random Walk Down Wall Street, the time-tested strategy for successful investing? What does that one bring to the table?
It's a good one. So Burton Malkiel, the author, he explores the idea of market efficiency.
Market efficiency.
Yeah, so basically he argues that it's really hard to consistently beat the market.
So trying to pick winners all the time is a tough game.
Very tough. And Malkiel suggests that a diversified portfolio of index funds is often the most sensible way to go.
So it's kind of similar to Bogle's approach in a way.
It is. It's about recognizing that you don't need to be a stock-picking genius to be successful in the market.
That's reassuring.
It is.
And of course, we can't talk about investing legends without mentioning Warren Buffett himself.
He's in a league of his own.
Right. His book, The Essays of Warren Buffett, Lessons for Corporate America, seems like it's packed with wisdom.
It is. It's a great read.
What stands out to you about his investing style?
Well, Buffett really emphasizes patience, discipline, and investing in businesses you understand.
So like doing your homework.
Exactly. He's known for his long-term view and for his ability to find those undervalued companies.
Wow, he makes it sound so simple.
He does, right. But there's a lot of wisdom in that simplicity.
Definitely. Before we wrap up this part of our dive, I wanted to share a quote from Buffett that really resonated with me.
Oh, let's hear it.
He said, "The best investment you can make is in yourself."
That's so true.
Isn't it?
Like investing in your knowledge and skills is something that pays off in so many ways.
Absolutely. It's an investment that keeps on giving.
Couldn't agree more. It's about building your own potential.
Exactly. And on that note, we'll take a quick break and be right back to delve deeper into some practical steps you can take to start your investing journey.
Sounds good. I'm ready to get into the nitty-gritty.
Me too. Let's do it.
It really is an investment that keeps on giving.
Absolutely. So we've covered a lot of ground already, but I'm sure some people listening are probably feeling a little overwhelmed.
A lot to take in.
Yeah, like where do I even start,
Totally understandable.
What would you say to someone who's feeling that way right now?
Well, first I'd say take a deep breath. It's a marathon, not a sprint, right?
Good advice.
And both Fidelity and Vanguard, in their guides, they emphasize how important it is to set clear financial goals.
Oh, that makes sense.
Like before you do anything else, figure out what you're actually aiming for.
It's like planning a trip, right? You need to know where you're going before you start packing your bags.
Exactly. Having those goals gives you direction.
So true. But how do you figure out what level of risk you're comfortable with? That seems tricky.
Yeah, risk tolerance is definitely a key factor.
It is.
And it's not always easy to figure out, especially when you're new to investing.
Especially when you're new to investing, right?
The Introduction to Investing Guide, that one does a good job of explaining how different asset classes carry different levels of risk.
Right. Some are riskier than others.
Exactly.
So it's about figuring out how much risk you can stomach.
Basically, like, are you okay with potentially bigger swings in value?
Right. Or do you prefer something more stable?
Exactly. It's all about personal preference.
And knowing that helps you choose investments that align with your comfort level.
Exactly.
Speaking of comfort level, I think market volatility is a big thing that trips people up.
Oh, for sure. Those ups and downs can be scary.
Right. It's hard not to panic when you see things dropping.
Absolutely. But both Fidelity and Vanguard, they address this directly in their guides.
They do.
Yeah, they basically say, look, market fluctuations are normal.
They're part of the game.
Exactly. It's going to happen, you know. The key is not to freak out and make impulsive decisions based on those short-term movements.
So easier said than done, I imagine.
Oh, definitely. But that's where that buy and hold strategy can come in handy.
Right. Riding out those waves.
Exactly. It's about trusting the process and remembering that you're in it for the long haul.
Though sometimes it is hard not to get caught up in the hype.
But it is, or the fear, you know.
The fear, especially.
But having that solid plan in place can really help you stay grounded.
Okay, so the plan is key.
It is. It's like your roadmap.
Makes sense. Now, for those specifically thinking about retirement, both Fidelity and Vanguard offer some good advice on those target date funds.
Yeah, those can be a lifesaver for retirement planning.
Could you remind us how those work again?
Of course. So basically, they're designed to automatically adjust your asset allocation as you get closer to retirement.
Oh, so you don't have to manually adjust things as you go.
Exactly. They become more conservative over time, which makes sense as you approach retirement.
Right, you don't want to be taking on too much risk at that point.
Exactly. It really takes a lot of the guesswork out of managing those retirement savings.
That's super helpful.
It is.
But with all this talk about inflation lately, I'm curious how that plays into investment decisions.
It's a big concern for a lot of people.
It is. It feels like everything is getting more expensive.
Right. And as prices go up, the purchasing power of your money goes down.
Right, your money doesn't go as far.
Exactly. And Vanguard actually talks about this in their guide.
So what's the best way to protect yourself from inflation eroding your savings?
Well, having a diversified portfolio that's aligned with your goals, your risk tolerance, and your time frame is a good starting point.
So basically sticking to the plan.
Yeah, pretty much. And this is where it's important not to overreact to those short-term market fluctuations.
Even if things are looking a little scary.
Yeah, even then, making those big changes to your portfolio based on what's happening right now can actually hurt you in the long run.
Interesting. So it's about keeping a cool head.
Definitely. Don't let emotions drive your investment decisions.
Makes sense. You know, we've talked a lot about the logical side of investing, but there's a big emotional component too.
Oh, huge. Investing can be an emotional roller coaster, honestly.
It can.
That fear of losing money can be paralyzing, you know?
It can.
And on the flip side, that desire for quick profits can lead to some impulsive decisions.
So it's a balancing act.
It really is. That's why having a sound investment strategy and sticking to it is so important.
So take the emotion out of it.
As much as possible, yeah. It's about making those rational decisions based on your goals, not your feelings.
That makes a lot of sense.
It does. And, you know, it's okay to seek help if you need it.
Oh, good point.
Like, if you're feeling overwhelmed or unsure, talking to a financial advisor can be a great idea.
They can offer some guidance.
Exactly. They can help you create a plan that's tailored to your specific situation.
So you're not going alone.
Exactly. They can help you navigate those tricky emotional ups and downs, too.
That's so valuable. Sometimes you just need someone to talk things through with.
For sure.
Another thing I wanted to mention, especially for those new to investing, is the impact of fees.
Oh, yeah. Fees can really sneak up on you.
They can. It's not always something people think about right away, but it can make a big difference over time.
It can.
Like Vanguard, they highlight their commitment to keeping fees low.
They do. And Fidelity stresses how important it is to factor those fees in when you're comparing different investments.
So it's like you want to make sure you're getting the best bang for your buck.
Exactly. Lower fees mean more of your money is actually working for you, you know?
So it can compound faster.
Exactly.
Makes sense. I know we've thrown a lot of information at people today, but I hope they're walking away feeling like investing doesn't have to be this scary, intimidating thing.
It doesn't.
It's about taking those small steps.
And learning as you go.
Exactly.
And building your confidence over time.
Building that confidence little by little.
And remember, there are so many resources out there to help you along the way.
There are. We've mentioned a bunch today, but there are tons more out there.
For sure.
So with the knowledge you've gained today, you're well on your way to making those informed decisions about your financial future.
You are. It's all about taking control.
So before we wrap up, I'm curious, what do you think is the most important takeaway for someone just starting out on their investing journey?
For me, it's that feeling of taking control, like you're actually taking charge of your financial future.
Yeah. It's empowering, isn't it?
It is. It's like, hey, investing isn't just for the experts. Anyone can do it.
Exactly. And everyone should, in my opinion.
I agree. It shouldn't be this exclusive club. Right. It's about breaking down those barriers.
Totally. Making it accessible to everyone, no matter their background or income level.
Absolutely. Everyone deserves the opportunity to build wealth.
So true. And we talked about some really helpful resources today,
We did.
like those guides from Fidelity and Vanguard on how to actually start investing.
Those are so practical.
They are. And that Introduction to Investing guide, that one was great for demystifying all those asset classes.
It was. Stocks, bonds, real estate. It laid it all out so clearly.
It did. Oh, and of course, those books. 7 great investing books for beginners had some real gems in there.
Oh, yeah, those books are packed with insights.
They are. It's like having a personal mentor guiding you through the world of investing.
I like that analogy. A wise mentor sharing all their secrets.
Right. And remember that quote from Warren Buffett about investing in yourself?
Oh, yeah, that's a powerful one.
It is. It's a reminder that knowledge is key in investing and in life.
So true. The more you learn, the better equipped you are to make those smart decisions.
Absolutely. So as we wrap up this deep dive, I'm curious, what's your next step? Like in your own financial journey, what's the first thing you're going to tackle?
Tough question.
Is it finally creating that budget? Or maybe opening that high-yield savings account we talked about?
Ooh, those are good ones.
Or are you ready to take the plunge and invest in a low-cost index fund?
All great options. The key is to just pick something and start, right?
I think so. Don't let the fear of the unknown hold you back.
Exactly. It's about taking action.
And remember, investing doesn't have to be this complicated, overwhelming thing.
Keep it simple.
Start small, learn as you go, and enjoy the journey.
That's the best advice.
I think so too. And until next time, happy investing, everyone.
Happy investing.